Let's have a quick chat about exemptions, Dennis. This is a big one for people. And again, a lot of people I find have gone from a situation where they might have had an exemption of 400 grand, 450. Now it's being pulled because the house fell through, or they can't get an exemption where they thought they were going to get one. And now they're fishing in that kind of pool of maybe 300 to 350 grand of a property price. That seems to be very active at the moment. And a lot of people are getting priced out. Here's some horror stories. Houses at 295, and before they even ring the agent, are being told, or the first call to the agent, it's 320, 325. Have you experienced that? Because obviously you're in the eye seeing a lot of people coming in. You're all very busy. So what's your experience?
So look, I think the big thing what happened is when the lockdown came, exemptions just went out the window for the majority of banks.
Yeah.
So just to kind of break it down, the exemptions is based around the percentage of the bank's mortgage business for each year. So that's usually forecasted. And then when the pandemic came, mortgage business retracted from possibly 10 billion forecast for year right down to 6.6 billion or around those figures. So you're looking at the exemptions based on a 10 billion market versus 6. So straight away, a whole lot was wiped out. So what it is then is like each bank have their own rules. Each bank apply them, but this is a moving goalpost throughout the whole year. So anyone I would just say to please just not sit tight, but this thing changes from week to week, day to day. You always need to be ready to move when things change. The clock does start in January again, but there's ways to kind of preempt that or come a bit earlier.
Okay.
So what happens at the banks? So just maybe talk a bit about that. So
from an exemption point of view, are you guys willing to take on a client looking at an exemption at the moment? And if so, what do they have to? What are the rules around that? I know you don't have buckets of them sitting in the background somewhere, but you have got a few.
We do. No, we have first-time buyer exemptions available for your loan to income, so you can get up to 4.5 times if you're a first-time buyer.
Okay.
And we're open for business in that area.
Brilliant.
And they're available
for everybody.
Yeah.
By the way, if you're watching this interview, do not contact Dennis directly. I'm going to give an email that you contact for the EBS if you're looking for an exemption or you think. Just watch the rest of this interview, please, and make sure you qualify. We're going to go through how you qualify with the EBS. So don't automatically turn off now and start shouting Dennis out. So just to give you the email quickly, it's ifsc@mail.ebs.ie. I'm going to put it up in text at the end of this interview as well. But please, don't turn off and go straight to contacting Dennis. There is certain rules and conditions to try and qualify for the exemption. So Dennis, let's take us through these rules for the exemptions and what the EBS look for. So let's take myself and my wife Sarah, we're going for an exemption or I'm picking up the phone to you. What are you looking for?
Okay, it's coming down to the main I suppose triggers around disposable income. So what is your disposable income after all your bills are paid, after the mortgage is paid, after all your outgoings? So, and that figures sitting around €3,500 where you need to be for a joint first-time buyer.
Right. So automatically, I know viewers are looking at this going, don't earn that much. And that's unfortunate. So, but like everything with the mortgage business, and I've been saying this to everybody in the interviews or on my videos recently, is that it's not a one-size-fits-all when it comes to mortgage. So some of these things are going to be suited to people on much higher incomes and have much higher disposable incomes than somebody on a low income. And there's nothing we can do about that because that's the rules. And so this will be annoying to some people and this will be great news to others. So unfortunately, we're going to focus on the great news for others. So from that point of view, then, myself and Sarah have, I don't know, just say for argument's sake, we have a combined income after we pay our taxes. So what hits our bank accounts is say $6,000, just say for argument's sake. So we're bringing home some net $3,000 each, which in fairness is a big enough chunk of change for people to be bringing through, and we have to acknowledge that. You're saying that if I can show you that after I pay my mortgage, look after the kids and bills, and I have $3,500 left, I'm probably going to get an exemption. I'll be qualified for an exemption with EBS.
You can qualify, to go up to 4.5 times your
salary. Brilliant. Okay, that's great news. It's going to be a big stress relief for a lot of people out there. Now, let's talk about that net disposable income, the difference between the $6,000 and the 3.5. So I've got $2,500 to play with. That $2,500 has to include my mortgage repayment, any loans I have. So this is why I always say to people not to have any car loans, because this one's going to eat in, or personal loans going to eat in here, isn't it? That $2,500. Yeah.
Credit union loan, car loan, childcare.
Talk us through the kids. We've 3 kids. Am I going to have to adopt them off, or what's the crack?
They're a cost, and if you do have 3 kids, you know how much they affect your wallet. But you're looking at it. You're kind of €250 per child is a kind of a monthly commitment when you have kids. So
Yeah,
that's
okay, that's fair. That's the affordability spend for you guys. Okay, so that's about 750. So again, just to say this to everybody and to make it really clear figures wise. So if you're bringing home that kind of £6,000 combined, you need £3,500 kept aside for the EBS to qualify for the exemption. And then what will happen is that other £2,500, the difference of the 3,500 and the 6, is you have to pay a mortgage. You have 3 kids, the 750 gone, and then if you have a car loan, let's say you have a car loan of 250 quid a month, and 3 kids, that means you're down to 1,500 towards your mortgage. So that's something to really consider. So have no loans and no kids, and you're laughing at it.
Look, first-time buyers maybe wouldn't have 3 kids.
Yeah, exactly. No, in fairness, they don't. And most first-time buyers I deal with through Ask Paul, they're all trying to get loan-free, and they all have really good savings. And a lot of people, we've been noting this through COVID as well, a lot of people that kept their jobs and are lucky enough to have full employment have cleared those crap loans that they may have had. So they're going to be in this good position, hopefully, which is obviously great news for them.
And look, the term for first-time buyers 35 years, so that shrinks the mortgage payments.
Right, okay. So there are a few tricks that we have that we can extend the term to bring them. So if your mortgage repayment at 25 is 1,800 and you extend it to 35 years, you can bring your mortgage payment down to whatever 1,450 or 1,500 quid in that example. So there's a few tricks to get the mortgage repayment down to make sure you can qualify for the mortgage you're going for. What I will say to everybody who watches this video, I know this is a weird video for me as usual, just talking directly to people. It's great to have Dennis here giving the wealth of information. But again, from the video point of view of the content we always do on Ask Paul, this is why it's so important to have those loans and why it's so important to keep your house in good order and have your deposits and everything set up. Right, Dennis, look, this is great news. I think this is amazing for people because everybody thinks exemptions are going to win and you can't get them. So it's great news, and hopefully this will add value and help people get on that property ladder a little bit quicker.